4, 3, 2, 1. Buckle your seatbelts, batten down the hatches. Coming to you live from the Blazar Podcast Studios in Space City, Texas. It's time once again for the Capital Catalyst Show, the podcast for entrepreneurs to learn the secrets of attracting, raising, and closing capital from high net worth investors. Dedicated to your success, this is the Capital Catalyst Show. Now here's your host, Brad Blazar.
Hey, listeners, welcome back. It is your host once again of the Capital Catalyst Show, Brad Blazar, also known as the $2 billion guy. That's right, the guy that's raised $2 billion through his efforts, the efforts of teams he's led for some of the world's leading financial services firms. As I like to say, we coach, we mentor, we teach, we educate people on how to attract investor capital so they can build, buy, scale businesses, or as I like to say, simply be doing something bigger in life. Today's guest is a phenomenal entrepreneur. He's going to share his story with us today. He went from investing in an asset that he probably thought he would never own to today building a very successful portfolio of real estate all across the United States. It's my good friend and my guest today, Mr. Paul Montelongo from San Antonio, Texas. Paul, welcome to the Capital Catalyst Show, my friend.
Thank you, Brad. Glad to be here. How are you doing today?
I am doing fantastic today, doing great. It's good to see you. Of course, I've got to know you and your wonderful wife, Leticia. But I always like to start off our episodes with people kind of sharing how they fell into raising capital, because raising capital is certainly not something that they teach in most schools. It's something that many people never figure out, never crack the code to, and you become pretty damn good at it. But I'm sure, as you grew up and kind of went through life, you probably never thought that you'd be raising the tens of millions of dollars that you have successfully raised over the course of your journey as both a capital raiser and also as a real estate investor. So can you kind of maybe share your backstory on how you got started in this?
Of course. It's always fun to talk about the backstory and the journey, even though I never think about it or hardly ever think about it until someone like you asked me. But you're right. We didn't sit around the dinner table at home, when growing up and saying, well, let's talk about capital raising. I don't know that that's a thing. But just originally, I started investing in single family residences and flips, which many listeners, I'm sure, are doing that or have done that. And that lasted for many, many years, 30 plus years. And that all came from, I had made my first investment when I was 17 years old in a raw piece of land. And then I turned it, I flipped it 2 years later and made double my money. And totally on accident, by the way, complete accident. And there was no plan. No, there was complete, in fact, I put my parents' home phone number on the for sale side because I was still living at home when that happened. But then through my career, I learned that there was a better way to do things because everything that I had done up to that point was self-funded. My businesses that I had started and owned and ran, the investments that I had created through single family flips and rental properties, they were all self-funded. Or of course, bank funded, but no equity partners, none of that. But I dipped into it a little bit during my flipping days in that you could JV with somebody. So in some cases, other people were using my money. In some cases, I was using other people's money. And so that one little component there is kind of the framework for what you teach and for what I do. 2013, I had an opportunity to buy a marina. And this is 115 boat slips and 30 something RV spaces. And I'd never owned a marina. I'd never owned a campground. I'd never owned anything on the lake. I'd never even owned a boat. But we went ahead and we made an offer. This ended up being a $2.6 million transaction, but it required $1.4 million in capital or equity. And I thought, well, sure, I've got a long career. I have lots of contacts. I have a pretty nice Rolodex. And so I just started flipping through my phone and started asking people that I knew, and would they like to invest? And would they like, I would explain the deal, and I would explain, what was in it for them and what I thought was in it for us. And of the $1.4 million that I was supposed to raise, I raised zero, absolutely zero. And this was quite a sobering moment. So how do we get the deal closed? I had someone introduce me to another gentleman. He had a very extensive network. He had been in the money raising business. And in 9 days, he raised the entire $1.4 million.
Wow.
From an investor database that he had curated, nurtured, had generated over the previous 5 to 7 years.
Mm-hmm.
So that was lesson number one. To me, it's like this is very difficult to just go cold turkey and ask someone to park investments in your investment. So there's a relationship building process. And then he mentored me. I had a couple of other mentors, which, by the way, is an extremely important component here. Mentorship. You and I understand this. You have mentors. I have mentors. I still have mentors. You do. It's just, there's no replacement for hanging out with people who have been there, done that.
Right. Yep.
So then that led into buying other multi-unit properties, apartments, and now I've cycled through and or own and operated some 1,500, 1,600 doors. I currently have under management a little over 1,100 doors, and that includes a new development of storage on the ground up, 504 units. So, and these apartment complexes are in various markets in the Sun Belt. Very specific reason why. You know, that from South Texas up to Kansas, all along the center line there of the country. That's where the growth is, and so that's why we buy there. That's all that's all required capital raising. Every one of those transactions takes $3, $4, $5 million worth of equity to be raised, sometimes more, but of equity to be raised. And so with every project, there's a learning curve, and there's additional information and additional growth, and requires additional networking, and additional expanding your reach to draw in investors. So that's the version of my story that I'm going to stick with at this moment until it improves, and then I'll tell that version.
So you'll tell a different story. No, I love that. So your, I guess, desire to attract and raise capital really kind of came out of necessity. It started obviously with the marina, but like you said, you had a big goose egg on that one. And then from there were additional projects that required capital. The one thing that I would want to ask or know, because as you know, in this multifamily real estate space, there are experts, there are coaches. Many of them are teaching wholesaling. Many of them are teaching fix and flips. There's others that are teaching, multifamily. But usually what I find is they teach other people how to go out in the world and raise capital, largely doing what worked for them. And unfortunately, what's worked for one person may not work for somebody else. For example, if I went to one of the people we mentor and said, "Hey, Steve, I'm going to buy you a list of 5,000 wealthy households in San Antonio, Texas. We're going to invite all of those people to join you at an event that we're going to put together, and you're going to get up in front of, 60, 80, 100 people that gather there, and you're going to give them your little dog and pony show." There's a lot of people out there that would look at that and say, "Hell no, ain't going to happen. I've got a fear of public speaking, and there's no way in the world I can see myself doing that." But what we know is that is a very viable, great way to raise capital. And a lot of people raise millions of dollars organizing and putting together events. What for you in your journey of raising capital has proven to be the best model that you continue to do? Because one thing that I've seen with people that have created the level of success that you've attained is they go long in the same direction, which means they found something that works, they double down on it, and that's what they've continued to do because they continue to have success. So what is it for you that's worked really well?
I think the public appearances is probably my number one strategy.
Okay.
Like you, I enjoy being on stage. And there was a time period where I was on stage professionally as a professional speaker traveling around the world, speaking to the real estate and insurance industry.
Yeah.
That was very rewarding, very fulfilling. So I am comfortable with that, with public appearances, even though in my private world, I feel like I'm a bit more conservative and a bit more introverted. But I see it as an opportunity to educate. And I see it as someone educated me. And I see it as an opportunity to share my knowledge and share the wealth of information that I have. And when you're on stage and you do it right, and you do it professionally and you do it in a way that's appealing, it generates authority. So you have an authoritative element to you. And by the way, being on stage can be literally being on stage. It can be at the front of the room at a mixer or a conference. It can also be your video presence on social media, or your videos presence on YouTube, for example, if you or on a podcast like this, let's just say. So all of those are public appearances, in my opinion, and those are all viable and very, very good ways to let people know what you do. Okay, that's all good and fine. So now I've made a public appearance and people know who I am, and they get into my database or they approach me and they hand a business card. That's great. You still have to go do something with all of those contacts. You have to nurture them. You have to build relationships with them. You have to have Zoom meetings with them. Many times we have belly-to-belly meetings with them. There's still an ongoing process other than just collecting people. It's the nurturing and building of the relationship. But in terms of exposing others to my message and what we do, mostly it's public appearances.
Okay. Fantastic. So you're utilizing a strategy that I've also largely employed, not only in the coaching and mentoring, but also in attracting and raising capital, which is, speaking on stage. And I think you hit the nail on the head. Speaking in front of an audience can be live, but it can also be virtual.
Sure.
And, in this world today, with the Jobs Act, 506C, the ability to solicit, advertise, I see a lot of people that are having a lot of success where they will host a free webinar on a topic of interest related specifically to the industry or the sector or what it is they do. And in the data gathering process, name, email, phone number, they're able to create a lead generation for themselves. Names. Yeah. So, you have 100 or 200, whatever number of people register, but you're absolutely right. There is.
I would just add to that when you're on stage in any of those forums, okay, when you're making an appearance, I do believe that you must create value and teach value and share things that will be of importance to people that could actually help them move the needle in their life.
Yeah.
And so I hope that when people hear me or see me in a presentation, that they think that I'm adding value, and they may never ever reach out and contact me, yet what they heard adds to their life. And so that's an overriding, very deep belief that I've always had. It's like, if you're going to take the responsibility to be in front of people, then offer something of value. That's what I appreciate. I mean, yes, there are motivational speakers out there and there are comedians out there and those sorts of things. I get it. But if you can come away from a presentation with something that actually you can implement and it's going to move the needle in your life, then that was a win-win situation.
I would wholeheartedly agree, 100%. When we're given the responsibility of taking somebody's money and we're entrusted with that, our relationship changes. We become a steward of capital. We have to take on the role of a fiduciary. And sometimes, as we find out in business, while we go into every relationship with good, great intentions, things don't always work as planned. Walk our listeners through maybe one of the more challenging times you've experienced in your business, where, maybe a venture or deal that you didn't work out as planned, and it was kind of difficult, maybe hard to go to investors and say things aren't working out as we had hoped. I've certainly been in situations in the oil and gas industry, which is where I started, where we ended up drilling dry holes or wells that were very marginal. How do you work through that, and how has that affected you as a capital raiser?
So the number one strategy there is authenticity.
Mm-hmm.
Like if you have a deal that's having a challenge, then it's your duty to disclose that authentically and candidly to your investor base, and to disclose to them your plan to fix it. So that means that you've got to have a well thought out plan. And so I think the original question is, what you tell a war story, Paul. So I have war stories. Okay. And I've had partners that didn't work out, and I take responsibility for all of that, which I think is job one. Look in the mirror. It's not that the other individual did not participate in the problem, but I take the responsibility in that I was the common denominator in all those problems. Mm-hmm. So I find that the reason that this happens is, number one, I didn't take the time that I should have to get to know an individual. Number two, I was way too excited about the deal, and so my rose-colored glasses overlook some of the obvious things. It doesn't happen as much as often or as much as it did, say, when I first began, because when you first begin, you're very new.
Yeah.
You're very excited. You're thrilled. Everything that you do is great. And so it takes a little bit to get through, understand people. But I would say that the biggest challenge that I've had with, and this has only happened a couple of times. So the biggest challenges I've had with partners is that they didn't have the level of commitment that I did. I assume that if you're going to be my partner, you have the same or more or greater level, if possible, to the commitment of the transaction that I do. And I have found that that's not the case, even though they're a partner. And it's just, it's a personality thing. It's a thing in the DNA. And they probably could say the same thing about me. I don't know. I just know that, if I'm working till 10 o'clock at night to get a deal done, and you checked out at 6 in the afternoon when you should have been working on the same deal as me, you're not in the foxhole with me. And that's extremely important to me, because the partners that I have now, we are all extremely dedicated to the end game, and we will do whatever it takes. And if there is a problem, we will do whatever it takes to fix it and to disclose it candidly to our investors. It's been a learning curve. That's taken some time. At this moment, I feel like we're in a pretty good place. But that's the biggest challenge that I've seen, is an individual doesn't have the same level of commitment as you do.
I love it. I love it. You started in single family. Well, actually started with a marina. Then, of course, did a lot of single family. That evolved, of course, to multifamily. I love multifamily. What was it that led you now to start something that I'm sure initially probably was somewhat scary, ground up development on a 500 plus unit self-storage property? Why have you now moved? Is it just diversification to, diversify into other sectors, or are you seeing an opportunity perhaps there in storage where you're going to continue down that path after you get this first property up and running and stabilized, and continue to do more in the storage sector?
Well, the answer is yes, yes, and yes.
Okay.
I have a long history of being a contractor, developer, owning construction companies. And so that kind of work is very appealing to me. And I feel like I have a lot of experience in it. So though we were buying existing properties in multifamilies, an opportunity presented itself to do a ground up development in self-storage. We seized the opportunity, and the whole process has been it's been great, because it kind of takes me back to my roots. It's a new product. It's a new development. It's from the ground up. We get to decide and design what it's going to be, what it's going to look like, what kind of clients it's going to attract. Instead of buying somebody else's property and then reshaping that, we get to shape ours from the start. And yes, because of the success that we've had thus far and the fun in doing this process, I clearly see that we will do more of them. We're actually out looking for dirt right now in certain markets to be able to do this kind of product. And the space itself, the asset class itself, is one of those top 3 asset classes. It seems to be consistent throughout the last 20 or 25 years in occupancy and rents and rent growth and stabilization and profitability. So along with multifamily, storage seems to be one of those asset classes that will be around. As a society, we love keeping our stuff and we love putting it in big boxes. So that's where we are as a society. So as real estate investors, we can capture that.
Yeah, it's amazing that people will spend $225 a month to keep a bunch of shit that logically they know they should have thrown away, but we get emotionally attached to our food.
You actually said what I was thinking. I just didn't say it.
It's true. The one thing that I always love talking about with capital raisers is, and we've joked about this at the events that you've been so generous to attend, is the mistakes, the problems, the things that, new people into the industry do where, they find it challenging because they're going about the process the wrong way, or they don't set up the systems and structure from day one. And they find out as they become more knowledgeable and they learn some of the do's and don'ts. Oh shit, we made a mistake. And then they try to cover it up and, they get caught. What are some of the mistakes that you're seeing maybe today with some of the people that you're coaching and mentoring, or some of the more common ones that you see people make that would help some of the listeners that are going to listen to this episode so that we add value to them? Because I believe the role of a really good coach and mentor is not only to share knowledge, it's to point out those mistakes so that hopefully somebody does not make them in their journey, because we've seen so many other people make those very common mistakes.
Right. Well, first of all, when we do these programs, these seminars and shows that you put on, and we talk about the mistakes, that does seem to be one of the most popular segments, doesn't it? As we drive down the highway and we see a wreck, we love to stop and look.
Yeah.
So,
give it a new name at the next boot camp. We'll just call it, "This is the fuck up session, folks."
And everybody will be in the room listening with all ears, right? But I think last time we checked, I was at 26 or 27 of the most common mistakes. And I continue to think about it and add to the list just because it's fun. But I think the number one mistake is people just don't start.
Yeah.
And they frame it around, it's got to be perfect. Rather than making progress, everything has to be perfect. They have to have their website. They have to have their database. They have to have their autoresponder system. They have to have this and that and the other. And while all of that is true and all of that is in the works, that doesn't mean you can't have conversations with people about capital and about investments and about parking money in your investments for long-term growth. And some of those conversations can just be initial conversations. They don't have to be deal specific. They just have to be about what an investor is expecting with their money. Mm-hmm. So I think that's the number one mistake, is people just won't start. And then once they do start, the number two mistake, follow very closely, is they don't ask for the investment.
Mm-hmm. Yeah.
So I think that's and they see it as a sale, and there's so much resistance to people being salespeople.
Right.
And because of all of the stigma that someone else attached to that role, not you, but somebody else attached to the role, not you, the capital raiser. And so they don't ask for the investment. And that could be for a number of reasons. Number one, they don't think they have all that perfect stuff ready. They don't think that they have a viable deal. They don't think that they're afraid that maybe the capital investment is going to be at risk. So you know what? You just have to do the deal in a good way. Make sure that your deal is good. Make sure that you can articulate the nuances of your deal, so that an investor understands what they're getting into and the benefits. Those are the top two or three mistakes that I see. And over enthusiasm is the opposite. And that is they go right in and they ask you for an investment. You ask somebody for an investment without establishing the relationship and the rapport.
Right.
So those are the fundamentals. They seem pretty easy when you say them out loud, but and capital raiser after capital raiser, I see make these mistakes. I was on a coaching call this morning with somebody, and he was like, I don't know if I should put my investors in this deal because they may want another kind of deal.
Yeah.
So the only way you're going to know that is to go ask. And the only way you're going to know that is to go find out exactly what their investment parameters are and have that conversation.
Mm-hmm.
But those are the biggest mistakes that I see happening with capital raisers.
I agree. And I think probably the number one mistake that we typically see is people presenting or pitching too prematurely in the process.
Sure.
People obviously invest with people they know, like, and trust. And trust takes time. It's like dating. You don't meet somebody and typically hop off and get married after the first or second date. There's a courting process. And I think that that's probably the number one thing. And I've heard you say this before when we've been together, when people ask you, Paul, should I be raising money now before I have a deal? Or should I find the deal first and then start raising the money? The answer is yes, yes. You want to be talking to investors literally throughout the year, building that interest, kind of building that database, because raising capital is more of a marathon. It's time consuming. And, if you're under contract and you're expected to close in 60 days and you've got to raise a decent amount of money, you haven't started, it's going to be real challenging. But if you've already got a group of investors halfway up the mountain that know, like, and trust you,
sure,
seeing that end game is much more likely, because now you've got a group of people that you don't have to invest all that time with. They know you, they like you, they know what you do. You've just put them on a list. And now they can make a decision much quicker because you kind of put them on the back burner until you have a deal. Which you obviously do at this point. And so I think that you're absolutely right. You always need to be speaking to people, kind of moving them through that process. And I think the big mistake for a lot of people is just talking about the deal on that first or second date and not really looking at this as a building trust process.
100%.
People obviously invest with people they know, like, and trust. It's an emotional decision.
100%.
People.
Yeah, I was at a conference this week of family offices. And so representatives there from family offices were speaking to the group. And one of them, he said, listen, if I'm having a meeting with you and I detect that you see nothing but dollar signs above my forehead, then I'm out.
Yeah.
And, this gentleman had enough of these meetings where he could detect if someone was being authentic and if someone was there just for the money. Or if they were there, in fact, to work through solutions and to have a mutual relationship and to find out what the needs and benefits were of each other. Mm-hmm. There's a difference. There's a difference in the way that you approach people. There's a difference in the way that you communicate people when you have their sincere interest at heart instead of just a dollar sign above their forehead. Right. So do what you have to, not to go into a meeting where you have the viewpoint that this person is a dollar sign, that this person is an investor. This person has a fiduciary responsibility to their family and to their wealth. And they want answers. And those answers are going to come from the trust that they place in you as an individual that will be the steward of their money for usually 3 to 5 years. Yeah. And so we really have to check our ego at the door and check our intentions at the door to make sure that they're pure and that we're doing the best for investors. I had an investor this morning. He said, I'm thinking about this one and this one. And he explained the two to me, and one of them was mine. And I said, maybe you ought to really think about that other one, because that seems like an opportunity that's really fruitful for you in your backyard. And in that moment, through the explanation, I felt like maybe that was the better deal than my deal. My deal's great. My deal's fantastic. But for him, that particular deal might have been better for him overall. So you have to be willing to walk away from the car lot.
Mm-hmm. Yeah.
Walk away from the car showroom.
Mm-hmm. I think you brought up a really great point, and that is spending the time to really get to know people. Because, if you do this long enough, there will be investors that become a thorn in your side. There'll be people that you just sense as you're getting to know them are going to be a pain in the ass. And sometimes it's just better to say, Paul, as I'm getting to know you, I really don't know that what we're doing is for you, and just kind of parting ways. Or, you get an investor, and after they've actually invested, they become that thorn in the side, and you call them and just say, I'd like to offer to send you your money back. It seems to me like you're really stressing a lot about this. And a lot of times they get defensive and say, oh, no, please keep it. I want to be in the deal. And then you never hear from them again, which is a great solution as well. But it's tough to do that because so many people are so focused on the prize, which is the raising of the capital. But in reality, what I'm hearing you saying is while the money is important, the relationship supersedes that. It's really the relationship that is the important thing, and the money is a byproduct.
This is 100% true. 100% true.
I love that. Because I tell people in my journey of raising a lot of money, I have never raised a dime from a family or friend. And that seems amazing when you've raised, literally as much money as I have and been the head of capital markets for multiple billion-dollar companies where I could easily have gone to a friend or a family member and say, hey, it's my recommendation that you invest with Scott or you invest over here with Ramin. We're building a multi-billion-dollar company, which they are today, but it's that I value the relationship over the dollars and never want to have to walk in a room and kind of feel like that dog with its tail tucked between its legs running for the corner. And that does unfortunately happen to a lot of people. They tarnish their reputation, or worse yet, they diminish the relationship they have with people that they really care about over a bad investment opportunity. Well, this has been great, and I do want to thank you for your time today, Paul. I know you and I are partnered up to do an event here in the very near future where we're going to be hosting a boot camp. Can you take a minute or two and just kind of walk people through what we're going to be covering in that 2-day event? Because I think that would really be of interest to a lot of our listeners here.
Yeah, certainly. So you and I done programs where a lot of people are there to invest in real estate. Mm-hmm. And as a real estate guy for all of my life, and as a multifamily, multi-unit investor now, it's a natural segue to be raising money for real estate, and real estate investors need to raise money. It doesn't matter what space you're in right now, oil and gas or crypto or whatever, the skill set of raising capital transcends all of those spaces. And having said that, multifamily real estate continues to be one of the foundational investment strategies in our economy, because by all the best statistics, we are about $6 million short of adequate housing in this country. And so what that means is that that multifamily apartments and those kinds of products need to be, they will house people. They will continue to house people. And as it becomes less affordable for people to get a mortgage currently, then that drives people to apartment renting. And so that's why we continue to invest in apartment renting. And so at this boot camp, it'll be 2 days solid. Remember, I talked a few minutes ago about teaching and education and value. This will be 2 days solid of how to find deals, how to evaluate deals, how to create a team to pull off buying a deal, how to work with lenders, how to raise capital. You're going to teach a big piece on how to raise capital for these kinds of transactions. And then, how to get the loans for them, how to manage them. So I'm going to give like the real soup to nuts education in 2 days solid, no fluff. I call this a working man's seminar. So we're going to roll up our sleeves, and I'm just going to go through detail after detail after detail about how we put these deals together. Mm-hmm. And by the end of the program, you'll be able to see that, oh yeah, this is possible, and this is a thing that I can raise money for.
Yeah.
And the reason I got into multi-units was because as a flipper and as a single family resident investor, those are transactional. You do one, you fix it, you flip it, you get your check, you got to go do another one. But you buy a 100 unit apartment complex, and now you've got one transaction, but you have 100 different streams of revenue, potentially more. And so that made big sense to me. And so but the only way to get those kinds of deals done is to raise capital and to have the raising capital skills. So the first part is, okay, let's find out what makes a good deal and where do we find them? And then the second part is, how do we raise the money to go make sure that we can acquire these and successfully operate them? That's 2 days. That's in San Antonio. That's April 5 and 6. We've rented a conference room. And as I said, it's just going to be blue collar, slide after slide after slide, nuts and bolts working. We're not going to do a bunch of hoorah and a bunch of dancing on stage. We'll save that for another time. This is education.
Roll up your sleeves, get on your work.
Absolutely. Absolutely.
Do a lot of work.
Yeah.
No, I love that.
Yep. And you want all the details, you can go to montelongocapital.com/SA bootcamp. montelongocapital.com/SA bootcamp. Perhaps you could put that in the show notes.
We'll put that in the show notes.
Yeah. And that'll give you the whole curriculum outline of what we're going to do. Of course, we'll feed you breakfast and lunch. And we'll have plenty of networking opportunities in the evening as well, because we want you to network with other like-minded capital raisers and other like-minded real estate investors. And I have learned that out of these events come great partnerships. So we talked earlier about partnerships. When you see someone in an educational environment and you see their commitment to the education, that's a good way to measure if someone's going to be a decent partner with you.
Love that. Love that. One thing I'd like for you to touch upon, because you said earlier in the show that a lot of people just never get started. And you and I both know this space fairly well, but I think a lot of people are held back from even thinking about getting started because they have bad credit. They're like, man, I just don't think I can qualify. It's like buying a house. They just equate real estate and all real estate to the false mindset of, well, if I'm going to invest in single family, they're going to look at me financially and I'm going to have to show my tax returns. And, I've been delinquent or I filed for bankruptcy a couple of years ago. As you and I know, the commercial real estate game is vastly different. Can you maybe touch upon that? Because I think for many listeners, knowing that can allow people to move forward and get unstuck in the process.
Sure. Let me give you the best part of this that I know. To a large extent, many of these loans are asset-based. So the leverage is based on the asset, not so much your ability to pay that back the asset, although that's extremely important and although that will be evaluated. Most of them begin with, is there value in the asset? And if there's inherent value in the asset or intrinsic value in the asset, then that makes it easier for a lender to underwrite and do the loan. All that to say, you still are going to have decent credit, and you're still going to have a decent track record, and you're still going to have a decent net worth, and you're still going to have decent liquidity. But the way that we worked around this, and this is the way that I worked around in the beginning, because I was not buying multi-million-dollar properties, and so I didn't have that track record. I partnered with individuals who did. And that's the key. So, and there are all those components that different partners can bring. Sometimes some of them can bring the business experience. Some of them can bring the guarantee the loan experience, the liquidity experience, the business management experience. The reason I got invited into that very first deal is because I had extensive entrepreneurial experience. Having hired more than 1,000 people in my career for various responsibilities. So I had extensive project management, managerial, entrepreneurial experience, and that gave me the experience to be able to get that loan. But I still had to have, marina people experience, which is what I partnered with. So the answer to your question is, don't let those things stop you. Find the people on your team that can fill those gaps. And that becomes your partnership team going forward to get that transaction done and that asset fully appreciated and done. So I will discuss this at length at the boot camp as well.
It's one of the things that I love about the real estate game, and hopefully for the people that are listening, hearing that will open up your mind to the possibilities of getting unstuck and moving forward. There are strategies, there are partners, there are ways to do this. so that you can move ahead and become a very successful real estate entrepreneur. So don't let that be a limiting belief that holds you back, everybody, from doing that bigger thing in life. Paul, you've been a great guest. Thank you so much. For the people that are listening that would want to, of course, join Paul and myself in San Antonio, he shared, of course, the link, Paul, montelongocapital.com with the /SA for San Antonio Boot Camp. We'll put it in the chat notes. This is Brad Blazar, thanking you so much for dialing in and listening to this wonderful episode of the Capital Catalyst Show. Till next time, listeners, we hope that you dial in. Put a like here in the chat if you like this episode. Become a subscriber. And this is Brad Blazar saying to all of our listeners, we look forward to seeing you next time. Thank you so much for dialing in, and we'll see you soon.
You've been listening to the Capital Catalyst Show with Brad Blazar, the best place for entrepreneurs interested in doing something big in life, having considerably less stress, and a more balanced life. Go to bradblazar.com for more ways to accelerate your success.